If something is truly irrelevant, it disappears from conversation. It fades into silence, into disinterest, into complete neglect. And yet, XRP seems to exist in the opposite reality. Because the more it is dismissed, the more it is discussed. The more it is criticized, the more attention it attracts. Not occasionally, but persistently, almost rhythmically. And that raises a question most investors never stop to ask. Why does an asset that is supposedly insignificant command such consistent psychological energy from its critics? Indifference does not produce obsession. Markets do not waste time attacking what they do not perceive as a threat. And yet, within certain circles, XRP is not just questioned. It is actively resisted. Repeatedly. Publicly. With unusual consistency. But that is only the surface layer of the paradox, because what appears as criticism may not be about fundamentals at all. It may be a reaction to something far less visible and far more structural. And once you begin to see that layer, the narrative starts to shift in a way most market participants are not prepared for. The market at first glance appears undecided. Price moves, then pauses. Momentum builds, then disappears. And over time, that pattern begins to wear on participants who are conditioned to expect direction, not stillness. XRP has remained in this state longer than most are comfortable with. A prolonged range defined by expansion attempts that fail to sustain and pullbacks that refuse to break structure. To the average observer, this looks like stagnation, a lack of interest, a market that simply cannot find a reason to move. And that interpretation, while common, is rarely questioned. Because retail logic tends to simplify what it cannot explain. If price is not rising, demand must be weak. If demand is weak, the asset must be underperforming. It becomes a linear conclusion drawn from incomplete observation. But markets are not linear systems. They are layered, strategic environments where visible price is often the final expression of invisible positioning. And this is where the discomfort begins to signal something else entirely. Because extended periods of compression do not always indicate absence. In many cases, they represent containment, a balancing of forces where supply is being met repeatedly without allowing price to expand prematurely. But that alone does not explain why this phase persists. What matters more is what is happening within it. What looks like weakness on the surface is often silent strength underneath. Sideways price action, extended ranges, and repeated tests of support are not failures, they are absorption. Liquidity is being collected quietly, patiently by those who understand that visible volatility is the friend of the uninformed and the enemy of the prepared. In XRP's case, this compression is not random, it is a preparation phase. Every failed breakout, every retracement, every stalled rally is a signal that supply is being absorbed, that the market is consolidating at a level where future expansion can occur with minimal friction. To interpret it as lack of demand is to miss the invisible architecture of accumulation. Institutions, with their long-term lenses and strategic patience, operate in ways retail rarely perceives. They are not chasing headlines, reacting emotionally to price swings, or speculating on overnight movements. They move when conditions are structurally favorable. And the sideways phase we see now is precisely that kind of environment. This is why conventional interpretations fail, because they measure activity in noise, not in order flow, in chatter, not in commitment. And that is the distinction separating casual observers from informed participants. The most interesting part is not the price itself. It's what this phase reveals about those who are quietly positioning beneath it. Institutions do not comment lightly, and they do not allocate capital without careful consideration. When a leading asset manager like Franklin Templeton's head of digital assets publicly acknowledges Ripple's strategic vision, it is more than a soundbite. It is a signal, not of speculation, but of serious engagement. These endorsements matter because institutions operate in layers. They are assessing compliance frameworks, infrastructure readiness, and systemic resilience long before the price reacts. A nod from Franklin Templeton suggests that XRP is no longer merely an experimental token. It is being evaluated as part of the financial architecture itself. This is reinforced by patterns we see across the broader institutional landscape. BlackRock, Fidelity, and other major players have all engaged with tokenized assets and settlement innovations. XRP's design, fast, scalable, and regulated, positions it uniquely within this institutional lens. The market, as retail perceives it, may appear quiet, stagnant even. But underneath, allocations are being considered, relationships are being formalized, and frameworks are being stress-tested. Retail obsession with volatility misses the nuance of these moves. Institutions are not chasing short-term swings. They are constructing a foundation. And when that foundation aligns with strategic interest, the eventual market expansion is not chaotic. It is deliberate and sustained. What comes next, however, is not purely financial, it is political. Regulation is the invisible force shaping these markets, often more than price action itself. Coinbase's public opposition to a compromise in the Clarity Act is not a minor disagreement. It is a window into the tension between emerging crypto power centers and established legal frameworks. What this reveals is crucial. Regulation is not a predictable lever. It is a negotiation. A dynamic interplay between corporate influence, governmental authority, and the underlying technology itself. When a major exchange openly resists a regulatory adjustment, it signals that the stakes are substantial and that outcomes will be determined not by simple compliance, but by strategic positioning. For XRP, this is particularly meaningful. The token exists at the intersection of institutional adoption and regulatory scrutiny. Its infrastructure is already designed to interface with financial institutions, but the path forward is contingent on how these regulatory debates resolve. Observers who focus only on price are blind to the broader forces shaping market opportunity. And while these regulatory skirmishes might seem like friction or risk, they are also evidence that the asset is being treated seriously. The market is no longer an unregulated playground. It is a contested space, and XRP sits squarely in the arena. This tension between visibility and compliance is where true strategic insight emerges. One of the most telling shifts in XRP's behavior is how it now responds or doesn't respond to external events. Geopolitical tensions, macroeconomic shocks, even sudden headlines that once triggered spikes or dips now barely register in price. At first glance, this may appear as indifference or stagnation, but what it actually signals is maturation. The market is no longer reactive, it is resilient. Participants are no longer treating every headline as an immediate trigger, and liquidity is behaving in a measured, controlled way. This is subtle, but critical. When reactive spikes diminish, it indicates that positions are solidifying. Long-term holders are absorbing volatility rather than fleeing from it. Price becomes less a reflection of panic or euphoria and more a reflection of structural alignment between demand and supply. Such a shift cannot be manufactured overnight. It is the result of repeated testing, absorption, and patient positioning, often by participants who are invisible to retail observation. And the implications are profound. This phase lays the groundwork for expansion that is less speculative and more deliberate. The market is telling a story beneath the noise, and those who recognize it gain an asymmetric advantage. When we integrate the patterns we've observed, psychological obsession, institutional signals, regulatory friction, and stable price behavior, a deeper strategic picture emerges. XRP is not merely a speculative instrument caught in temporary sideways movement. It is transitioning toward a position of financial infrastructure relevance. Consider the psychology first. Bitcoin maximalists obsess because they perceive a structural threat. Their criticism is a mirror reflecting institutional attention, not retail sentiment. The narrative that XRP is irrelevant collapses under this scrutiny. Criticism, in this context, becomes a signal, not a warning. Next, institutions are quietly acting. Franklin Templeton's endorsement is a tangible sign that serious capital is evaluating, if not already positioning, in XRP. BlackRock and other major financial players are exploring tokenized settlement and infrastructure which aligns with XRP's capabilities. The phase of sideways compression is exactly the environment where such strategic accumulation occurs. Regulatory tension, as illustrated by Coinbase and the Clarity Act, adds another layer. It is not a weakness, but a negotiation of future pathways. XRP is actively participating in shaping the rules, directly or indirectly, signaling that its potential extends beyond short-term speculation. Finally, price behavior reflects growing maturity. Lack of reaction to news does not indicate irrelevance. It indicates stability and preparedness. The market is absorbing volatility, consolidating liquidity, and waiting for the structural conditions to allow meaningful expansion. All of these signals together reveal a silent transition phase, one that most participants misread. They see stagnation, we see strategic positioning. They see noise, we see accumulation. They see risk, we see asymmetric opportunity. This is the phase that separates casual investors from those with foresight. Those who recognize it are positioned to benefit when the market finally acknowledges the underlying structural alignment. And the key is patience, not the anxiety of short-term reaction, but the confidence born from understanding what is occurring beneath the surface. Most investors will never appreciate this phase. They are conditioned to seek movement, to interpret volatility as opportunity and stillness as failure. But the calm, the consolidation, the silent absorption, these are the markers of structural evolution, not inactivity. Being part of this smaller, more informed group requires reframing how we perceive markets. Patience is not passive, it is active understanding. Stability is not stagnation, it is readiness. And sideways movement is not indecision, it is preparation. The paradox is that the very conditions that frustrate the majority, the absence of dramatic rallies, the quiet accumulation, the lack of reaction to external noise, are the conditions that create asymmetric potential. Those who see the structure rather than the noise are effectively reading the market one layer deeper. XRP is at such a juncture. Its price tells one story, its context tells another. Regulatory debates, institutional endorsements, market psychology, and liquidity, absorption together form a narrative that is far more revealing than any headline could convey. To act on this insight requires calm conviction, not impulsive trading, not speculation, but recognition of where strategic advantage resides. This is not a phase to chase. It is a phase to understand, to observe, and to position for patiently. And when the broader market finally perceives what is already in motion, those who have maintained perspective will find themselves far ahead, having benefited from the silent accumulation that most dismissed as irrelevance. What this entire sequence underscores is that market narratives are rarely what they seem. Headlines, chatter, and daily price swings often distract from the structural realities that determine long-term outcomes. For XRP, the true story has been written beneath the surface, in places most participants do not see. The combination of psychological projection from critics, institutional interest, regulatory negotiation, and disciplined liquidity absorption creates an environment of quiet opportunity. Each layer reinforces the others. Criticism signals attention. Institutions validate strategy. Regulatory friction confirms relevance, and price stability signals readiness. Together, they form a lattice of strategic insight that is invisible to the casual observer. The informed investor recognizes the value of patience in such moments. Acting impulsively on noise is the mistake of the majority. Interpreting patterns, positioning quietly, and waiting for structural alignment is the hallmark of the minority who consistently achieve asymmetric results. XRP's current state is not a problem to solve or a mystery to decode. It is a lesson in market evolution. Those who perceive this phase correctly will benefit not from speculation, but from a deep understanding of where real opportunity resides. In the end, markets are patient. They reward those who can be patient in turn, who can see beyond the surface chaos to the underlying currents shaping future outcomes. For XRP, that reward is not hypothetical. It is already being quietly constructed beneath the noise, in plain sight for those willing to observe carefully. Markets are noisy, unpredictable, and often unforgiving to those who act without clarity. But true advantage lies in perspective, not reaction. XRP's journey through sideways ranges, institutional scrutiny, regulatory friction, and market stabilization is not a story of confusion, it is a story of preparation. Most investors misinterpret this quiet phase as stagnation or weakness. They chase headlines, respond to short-term fluctuations, and measure opportunity in visible volatility. But those who understand the deeper structure see the paradox. The very conditions that frustrate the majority are creating the asymmetric potential for the informed minority. This is where conviction matters. The calm observer does not need to predict the next spike, the next rally, or the next headline. Their insight comes from recognizing patterns in behavior, accumulation, and strategic alignment that others ignore. XRP is not merely a token caught in sideways movement. It is quietly evolving, integrating into financial infrastructure, absorbing liquidity, and aligning with institutional and regulatory frameworks. Patience, perspective, and discernment are the ultimate advantages. By seeing what others overlook, the informed investor positions themselves ahead of the crowd, ready to capitalize when the market finally acknowledges what has been quietly building all along. This is the essence of calm, high conviction investing. To act not on impulse but on understanding.